The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we are working into the month of December, we saw a mostly lower trade at midweek on Wednesday, really across the board. You just look at things, grains, livestock, energies, plenty of red numbers. There was a few green ones, though. And we want to take a look at these markets and just kind of paint the picture of what we're seeing as we get into this holiday stretch. Could the funds be back to leading these markets? We're going to talk about that and more here today on the show. Joining us for market analysis, Mike Zuzolo with Global Commodity Analytics. Mike, thanks for being with us here on Market Talk today. Good to catch up with you again.
You too, Jesse. Thanks so much.
All right, well, let's dive into this. As I mentioned, it was a mixed bag, I would say, on Wednesday, my favorite term, but more red than green. Overall, quick hit summary here. Your thoughts on some of this early week market action so far?
You know, there's a lot in the orbit right now to be watching that could potentially drive prices higher as we get closer to or right after the WASDE report. And the first thing on the plate, the biggest planet in the orbit is the weather, Argentina's weather, and we'll talk about that here in a little bit. But there's also big weather in Russia, and the winter crops there are still suffering, and to a lesser degree, Ukraine. We also see a very strong cash basis. We're at multi-month highs in places like Kansas City. Corn's the highest since July, August. Beans the highest since August, September in terms of basis levels. And so I think that there's a lot out there that the trade could have traded, but it was Federal Reserve day in terms of their updated report. And you could kind of see the price action really revolving around some of those key macro-related commodities that we oftentimes look at. And so I think the Fed and the currency markets, along with the return of some tariff and nervousness, especially after the news broke about the clean fuel production tax credit not being extended or updated when the Biden administration, before it goes out of power, we still had some of that negative carryover, I think, in the corn market, especially from Tuesday's trade. So I want to say most of this was fund related because the footprint, I think, was mainly the funds.
Well, let's talk about that. I mean, we've seen funds controlling so much of these markets here, more so than really anything else. I'd say, fund money movement has kind of been the theme of 2024, I would feel like. So let's dive into this a little bit more. I know you're kind of making the case that here during what's normally the holiday malaise, we're kind of getting back into fund-led trading. So walk us through your thoughts here, Mike.
Yeah, and the question is, how long does it last? And that's where it comes back to, until the weather becomes something that makes the market nervous that global production is being impacted. That's what we've learned the last several years. And with Australia harvesting at this point, even though we're hearing about some quality issues because of rain during harvest in very key areas of Australia, that harvest looks pretty sizable. So it wasn't going to be, I don't think, possible on Wednesday's trade for the weather to come in and save the day with the Australian harvest. But the linkages here that we're going to talk about today are very simple: copper, wheat, copper, dollar, and then the dollar and commodity indexes and agriculture indexes in particular. And so it's a visual of what I see during the day in terms of trade. When the dollar moves up or down and it moves the crude oil and the copper around, I think that was what today was about. And that's where we want to keep our eyes peeled for this the rest of the week heading into the WASDE report in case we take out some key support levels. Because as we know, if the funds are in control, and this is the key to pretty much the whole video when it comes to the grains today, if the funds are in control of this market and we see a momentum shift to a more bearish mindset, then we can really start to lose some ground very quickly. We may make it up next week or by the month end, but it could be pretty painful in the short term, and that's what we have to be on the lookout for. So copper, wheat, 8-week correlation chart here at plus 94%. So they're almost neck and neck running in terms of positive price relationship in lead month futures on an 8-week running basis.
All right, that's copper wheat's correlation. You mentioned looking at copper dollar. What's the correlation here, Mike?
Almost exactly the opposite. Copper dollar is almost, it's a negative 0.93. So it's almost identical on an 8-week basis to what we just looked at with the copper wheat. So this ties these two together, that the copper and the dollar and the wheat are all running very closely with one another in either a very positive or very negative relationship. And so the copper market was very skittish today after I think a 1.5% gain on Tuesday. Many in the copper trade and the metals market that I looked at today, Jesse, were suggesting they're back to worrying about China's economy. They're worried about U.S. tariffs coming in and hurting their economy even more, and that hurting, the biggest user of copper in the world. I think the other thing that maybe is maybe a stretch, but I think we've seen it since President Trump's victory when he's named cabinet people. That he wants to be put into his cabinet. Peter Navarro, who's a pretty big hawk on China, he is joining President Trump's trade and economic team. That might have had enough to sway the market as well today.
Okay. And another one, you mentioned three correlations here. Let's look at the dollar versus the Goldman Ag Commodity Index. And what's the correlation you're seeing here, Mike?
Yeah, notice what the dollar has done as President Trump started to gain in the polls, and he actually won. We had a very big high put in place, went up to about 108 in the dollar, and you notice, and that's the purple bar chart, and you notice that just shut down the Goldman Sachs, S&P Goldman Sachs Agriculture Commodity Index to where it's now, it was trying to go through its highs from September, October. It's now starting to curl down. So that's what I'm trying to get at here, is that the funds are moving this market like I think they are, and the dollar doesn't cool its jets here. That may be a short-term sell signal in that ag commodity index, because right now it kind of looks like a double top. And I think that's really crucial, especially given some of the overbought conditions in some of the weekly charts for commodities like corn. Corn's a really tough weekly chart right now. It made a new 2-week high on Tuesday, fell back rapidly. It's starting to suggest maybe a sell signal on a weekly basis now.
Well, you brought up corn. Let's move there. And I felt that corn's kind of been choppy till this point, at least. And you look broadly at the world prices for corn exports. You look at the U.S. at the NOLA port. I mean, we're down low levels here compared to everyone else. So, what's your thoughts as you just look at this corn market a little more broadly, Mike?
Yeah, look at the white and the red line. The red line being the U.S. CIF NOLA second position, and then the Ukrainian is the white and at the Reni port, which is in a little bit more in the interior off the Danube River, but still feels the impact of the export market. Look at the fact that we're now below the price of Ukrainian corn at this stage. That suggests to me that we're on the right track of our previous comments about there's problems in the Black Sea region, and they may be oversold in terms of both Ukraine and Russia, depending on what their final production numbers are going to be. But their weather really matters. If you want to counterweight to South America having a huge crop, at least in the corn, you've got the Ukrainians, and to a lesser degree, you've got the Russians when it comes to the wheat and the winter wheat production as a feed grain. And I think that's a really key element to this winter's price action, Jesse, is if we keep seeing benign weather in South America, we're going to need to see that Ukrainian corn price keep going higher, because we could see the Brazilian and Argentine prices go lower. But what sticks out here most of all is all the big movers and shakers in the export market for corn. We are the cheapest on the block. And I think this is really important when we look at the big picture. And so I'm talking a lot to clients right now about that strong basis they're having in the interior versus the weaker futures market, and wondering if, and this is a question mark right now, but I'll get with clients by the end of this week, wondering if maybe a basis contract or two may not be a good idea if you've got a 3 or 4 month high in your spot corn and bean basis, and then maybe give the futures a chance to rally going into the end of the month or into the holiday season. And that's one of those positions where you're adding a lot of risk to your plate, because you're, instead of making one decision of a straight cash sale out of the bin, you're adding the element of futures and basis that you've lost control of. And I think that's really important to reemphasize.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Mike, let's rope the weather conversation in here, and let's first talk Argentina. Up to this point, Mike, I mean, weather has really been pretty ideal, it seems, after a late start for much of South America. We keep seeing these private estimates of crop production ticking higher, but what are you watching right now in terms of South American weather? Is this something that could eventually overtake some of this fund driven market action we're seeing?
Yeah, I really think so, Jesse, but the timing is of the most importance here because it may be the end of the month before we really feel that, or after the USDA WASDE report, they turn to South American weather again in the fund community. But if you look at this map, I'll call it the Little Italy, the little province that looks like Italy's boot there in the middle of the map, that's the Santa Fe province. If you go south of that, that's Buenos Aires, and you go west of that, you're talking about the other huge area of Argentina's crop belt. And so the 2 week map here for precipitation, and I've looked at 3 different models and done some of my own studies. This is the CPC from the National Weather Service, but almost every model that I'm looking at right now says 2 weeks from now, the droughty conditions could return in the heart of the Argentine corn belt. And we have to realize that they're just getting underway planting at this point, and they're just getting ready to get into their summertime in a couple months. And so this would be a very bad time for them to have a lot of dry weather because this is before they really heat up. And I think this is, again, where I would say if I make any kind of sales now because of the technicals and the funds, I'd be very willing to have stops above me, for instance, on like the 428 level on Dees corn or 438 level on March corn, something like that. If you close above that, you assume that that's probably a weather-led breakout, and you get right back in on the long side of this market. And I'm saying that specifically because I think we talked about this last week. I think there's going to be cash flow needs by farmers about 3 weeks earlier than normal. And so instead of the first of the year, I think it's going to be before the middle of this month that the farmers, a lot of them, will need to generate some cash flow. Some have told me they won't because they made a lot of bean sales and they actually have a lot of cash flow, and they're paying down fertilizer bills and inputs. But I am also hearing that there's quite a few producers that are going to need some cash flow before the first of the year.
It's going to be very interesting to watch here. It just the timing, unfortunately, on some of these different things is not maybe necessarily lining up for a little rally in the market to meet some of those cash flow needs, like weather. Again, probably end of the month, beginning of January. Then some of the uncertainties out there with tariffs and things of that nature. That's going to be a January thing when the new administration comes in. So, unfortunately, some of these things they're out there. Weather issues in Russia too. I mean, but a lot of these things they're still a few weeks away, is what it feels like, Mike.
Yeah, I'm glad you said that because, for me, Jesse, I'm going to say it right bluntly out. I mean, I've been doing a lot of research on the tariffs and the trade, and is this the same as 2016 or different? And the question really is, are these tariff threats by President-elect Trump, are they just negotiating tools or are they real? And I strongly believe they are both. And if we don't get those negotiations under wraps within, say, the first 100 days, I think we're going to have some tough times with especially countries like Mexico because they have been, with the new president, they have been very different in reaction to what President Trump did last weekend. I'm watching the Mexican peso like a hawk right now because I'm going to watch to see if that peso drops hard against the US dollar. That signals that the financial markets and the currency markets are worried about the trade much more than they are now. And if that's the case, does the corn follow that peso lower? Does actually the peso become as strong of a leading indicator as wheat when it comes to the corn market? And I think that's the kind of stuff we're going to have to look at as we get in that January timeframe. It's going to be wild. And that's why I kind of want a plan that gives me a leg up and a leg down as far as a way in and a way out.
All right, let's talk livestock. I am trying to make sense of this cattle market trade right now, feeders especially. We were lower Monday. I thought it was profit taking. Then we came back Tuesday and traded higher. And then here we are trading back lower again on Wednesday. So it's a seesaw right now in futures. What do you make right now? What's going on in this cattle market overall, Mike?
Yeah, I mean, this is the first leg of what we're talking about in the feeders here on the video. And we just got to look at these prices and understand that we're talking about lightweight feeders running into the fours at this point. When we look at like the winter livestock auction, running it up top end of 402 on the 4 to 5 weights, and 3 to 4 weights 437 and a half. This is starting to finally get pushed into the CME feeder cattle index, the cash index. And if you want a reason why I think we corrected and adjusted and had that outside day on the feeder cattle market and broke so hard, I think it was the commitment of traders report was being expected by the trade, and also more importantly that this cash index, which is the top right corner, that CME feeder index had not generated a rally yet off of these cash prices around the country. So we literally had for almost at times a $6 premium, 4 to 5, almost $6 premium in the futures versus the cash index since the November futures went off the board. And I think it was just housekeeping by the funds that created that. Now we've seen the feeder cattle catch up on the index, and it's given stability to this market. But this chart, these two charts together, when you look at the overall feeder cattle index, Jesse, and then you look at the 4 to 5 weight steer prices in Oklahoma City, that's plus $60 versus last year. The other weight groups are maybe plus 30, maybe plus 50 on the 7 to 8 weight steers. So it's really clear that these lightweight steers are running the show and running the feeder cattle index up. And that's because the sky high cash market that we're talking about is because the beef cow herd is around 28 million head, and it's the tightest since the early 1960s. So retention and getting females into the mix, producers, cattlemen aren't waiting for that. And I think it's going to create extra volatility as a result.
Let's look at this chart, looking at the CME feeder cattle futures along with the feeder cattle cash index, another piece of this puzzle. Obviously, a pretty clear uptrend here when I look at this, Mike. What are you watching right now?
Yeah, right on. This is where they're just neck and neck with one another, and you want to see that. You want to see that uptrend in the blue line hold up. If it doesn't, you really got to start wondering, are we moving back into the 14, 15, 16 time period? And I think, historically, there's really no precedent for what we're going through because of the beef cow situation and the red meat demand. And we do have relatively tight supplies, especially in the poultry side of the equation. But 2014, 2015, I think, is the closest we have for history. And notice, and this is what's so interesting and why I want to bring this to the attention of the viewer and you today, Jesse, is notice in those two highs back in 14 and 15, the purple line was the one that topped first. That's the futures. It wasn't the cash market. And this makes sense to me this go around because the funds are such big players in that mercantile exchange. So I just want to let you know the net long in the feeders right now for managed money is just under 17,000 contracts. That's back to the levels not seen since July of 23. We made our peak in June of 23, even higher than 14-15 for managed money net longs, which was just under 20,000 contracts. So that futures leading the show, though, on both those tops in 14-15 really surprised me initially.
All right, let's look at one more chart here on the video, and this is looking at the January feeder cattle daily chart. What's the big thing that you're keeping an eye on here, Mike?
This is such a contrast in the market, and it's very much like we talked about in corn. Notice the trend line in orange on January. We've gone through it now on a closing basis after Wednesday's trade. That is a trend line that's been intact ever since the beginning of November. And yet above the market, we have a gap at above 265 at this stage that goes back all the way to March. And so which is it going to be first? Are we going to break through the support level, take $3, maybe $4, maybe $6 off this price, go back down to the moving average of 247.70, and then go back up to the gap? Or is this a false breakout to the downside? And I think this is what you need to really be talking about with your broker, because a $5-6 slide would not be hard to do in this volatility, especially given the fund length. And then we could come right back again and have to fill that gap at some point before the January expires. And this is the type of market to get ready for and be prepared for.
All right, Mike. Always appreciate the insight. I should ask you the hog trade as well, real quick. Some
Yeah.
liquidation there. Any big notes on the pork side?
Very much so. I'm glad you asked. The hog market looks less and less likely to support cattle from here on out because the ham seasonal is in play, and more importantly, the Chinese market's breaking. I think we're down to the lowest levels in the Dalian hog futures since the springtime, if I remember right. And it may be spring of last year. I can't remember exactly, but it's a multi-month low at this point on the Dalian hog futures. And I think the CME futures is finally catching up to that.
All right, great. Mike, any other final thoughts you would share with us here this week?
No, I would just say that the move back up sharply in the dollar would indicate that the trade's hunkering down for some really tough trade times. And if you have the Brazilian real, the Chinese yuan, and the Mexican peso, and the Russian ruble all going down against the dollar at the same time, that's your fun market, and that's the fun-led market. And that's kind of why we wanted to talk about that today.
All right, Mike, if folks want to reach out to you and talk through their marketing strategy and more there at Global Commodity Analytics, what's the best way?
Best way is the website, globalcomresearch.com. It's globalcom with 2 M's, research.com.
With that, Mike Zuzolo, Global Commodity Analytics. Always good to talk with you, my friend. Thanks so much for joining us. Appreciate it.
Thank you, Jesse. Appreciate it a lot.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.